Howdy! It's Mike Lucy from the Leave a Legacy and Not Debt podcast video channel and now website. Yes, we just published our new website, www.leavealegacy.notdebt.com. It's currently being built. There's some content there, but lots more content coming. So today what we're going to do is a quick case study for a 40-year-old male, healthy non-smoker. This is an actual case study. A gentleman had reached out to me, 40 years old, male, healthy, non-smoker, and he was looking into Globe Life Insurance and had asked, is there anything better, or what are the alternatives to Globe Life, and is there anything better out there? And the answer to that question, is there anything better? The answer is yes. Not only is it yes, it's a big Y, a big E, and a big S. Yes, there are a lot better alternatives. So what we're going to do is take the same premium that Globe Life had proposed to this gentleman. We're going to plug it into a different kind of life insurance product or vehicle called an indexed universal life policy. And we're going to see not only do you get life insurance, but you'll get tax-free retirement funding. Please no, I don't want to embellish the story here and say you'll have a tax-free retirement and live a great life. What you're going to have is a big bundle of cash at the end of this policy that you can use tax-free. So yeah, there's a lot of benefits to this, and let's get started. I'm going to pull up the next screen and we're going to go through the exact parameters for this case, what this gentleman was looking for. It's $100,000 worth of term life from Globe. It's their term 290 policy, which means the policy is good until age 90. It's $100,000, $75.11 per month. On the website, it says it's a level premium, so $75.11 for the life of the policy. I have a hard time believing that because most carriers that offer renewable 5-year term policies, they increase the rate every 5 years. So I don't have exactly what that means here. I just suspect it not be true. Whatever the case is, even if it's $75.11 from age 40 to 90 on a renewable 5-year term for $100,000, we're going to blow it out of the water with our comp. And the comp is from Securian, which is also known as Minnesota Life. They're now known as Securian, and they're Orion Indexed Universal Life, or IUL. So Indexed Universal Life is a policy that's a hybrid of life insurance and a fund. Some people call it an annuity. It's just a fund. It's a fund that gets special privileges in the tax codes that allows you to use that money tax-free. That whole tax-free conversation is going to be another video. What we're going to do is just go through this case study real quick so you can see the benefits. For the same $75.11 in this IUL at age 90, when the Globe term to 90 policy expires and there's nothing left over, in this IUL fund, we have $200,000 plus in cash. So we have a bundle of cash there. So if you live to 91, you get nothing from Globe. And over here, you're going to have $200,000 plus in that bundle of cash. So you might be wondering, what's the catch? There's going to be one catch, and I'm going to clearly identify what the catch is, and we're going to do a real quick third case study to mitigate the catch. So what we're going to do now is we are going to take a look at the Globe website, and we're going to go through the same quote. So you can see it's an apples to apples comparison. Here we're on the Globe website. It's globelifeapplication.com. They have a very good marketing program, and it's $1 buys $100,000. Now, please note that $1 is only the first month. You pay $1 for that first month, and then the rate goes up. So we're going to get a quote for that one adult. John Doe, male, February 5th, 1979, 40 years old. We're going to continue to the quote. And down here, we're going to see $100,000 worth of coverage from Globe Life for $75.11. I'm going to select policy description. I'm going to read through this real quick. Policy description is, this is a modified premium term to age 90 product. The initial term period can be either 1, 2, 3, 4, or 5 years in duration, depending upon issue age. All renewable term periods begin at a 5-year plus 1 age, i.e. 21, 26, 31, 36, so on and so forth. and will be 5 years in length except for the final term period. The final 4-year period, which will always begin at age 86, will expire and the policy will terminate at the policy anniversary following the insured's 90th birthday. 2 things to note here. In the first sentence, modified premium. That just means it's expensive, folks. Don't worry about exactly what it means. It just means the price of doing business just went up. Finally, the last sentence says the policy will terminate at the policy anniversary following the insured's 90th birthday. Means if you outlive the policy, you have nothing left over. If you lived to 91, there's nothing. If you lived to 92, there's nothing. From ages 40 to 90, there's $100,000 worth of death benefit. But that's it. Okay, we're going to move on to the comp. So the comp is, it's going to be John Doe once again. So we're going to go through this comp real quick. We have John Doe, male, 40 years old, non-smoker. Now, please, we are running this for a standard health class, non-smoker standard health class. We can do better than this, folks, but we're doing worst case scenario here. So we're going to select non-smoker, which is standard. State is Michigan. We're going to go solve for face amount, and don't worry about the technical difficulty or the technical, what's going on technically. It's all going to make sense in 1 minute. So the total premium at $75.11 times 12. Go to our little online calculator. We're going to do $75.11 times 12 is $901.32. So $75.11 worth of premium for 12 months is a total of $901.32 annually. So that's what we're putting in here. Annual premium, $901.32. From ages 40 to 90, we're going to pay that amount. After age 90, we're paying 0. So it's an apples to apples comparison. Disbursements, we're not going to worry about. This screen, I'm just going to say a couple words. This is where IULs make money for you. So an IUL takes a premium payment, and please understand this, when you send your premium payment to the insurance company, they're going to take a portion of that payment, they're going to apply it to term life. They're going to take the remainder of the balance and throw it in a fund. And that fund's going to grow at an interest rate that's matched to an indexed account somewhere. In this case, it's the S&P 500. Okay, so we're going to put 100% of those leftover funds into an account that grows at 6.38% to 10.5. Those are the caps between the two, the min and the max. So at 6.3, we're assuming worst case scenario here. Policy options. It's a level death benefit and it's going to be paid monthly. That's what this is. And now we're going to select calculate. Our system is going to go to work for us and it's going to give us a report. We're going to go through that report real quick. Then we're going to do yet a third case after we see what's the catch. And we're going to mitigate that what's the catch. So we have a true apples to apples comparison. This should take not but a couple seconds. There we go. It's complete. And now we have a PDF report, and we're going to open up that PDF report, and we are going to scroll down to a table of goodies. You have to get past all of that boilerplate stuff. All right, so here's our table of illustrated values for death benefit and accumulation value. So you see here, it's year one. This first row is year one, age 40, $901 paid into the policy. The policy accumulated $436 worth of cash. And here's the catch. The death benefit at year one's only $65,599. There's a lot of math and complexity behind the scenes why that number is only $65,599. Has to do with tax laws. Don't worry about it. We're going to mitigate that here in a minute. So what we're going to do is scroll down and we're going to go to age, I believe it's 79. So at age 79 is when the death benefit for the IUL will match the death benefit of the globe term. You'll see here it's roughly $100,000. We'll just round up and call it $100,000. So at age 79, the policy has accumulated $94,000 worth of cash value and has a death benefit of $99,549. And please note, we've only paid $36,000 into that fund over time. But yet we've grown that cash value because of compounding interest. We've grown it to $94,000. So it's at this is the break-even point right here for the IUL versus term. So now if you live past 80, everything here is gravy from age 80 onward. So at age 80, we're going to continue to pay that $75.11 per month, and you'll see at age 80, there's $102,000 worth of cash value and $107,000 in death benefit. Let's fast forward to age 90. At age 90, when Globe Life says, okay, you can no longer get insurance for us. Thank you for the $46,000 you gave to us. Plus, the IUL says, all right, great. Well, thanks for the $45,000, and in exchange for that, we're going to hand you over a bundle of cash that's $204,000 plus right here, and you also have a death benefit of $214,000. So that's the difference. Okay, so what we want to do is mitigate as best we can, because John Doe really wants to have $100,000 worth of death benefit. He can't, like $65,000 worth of death benefit doesn't cover his needs, his immediate needs. So we're going to ask John, if you can afford $75.11 a month, can you afford $85.11 a month? And John says, yes, I can. So now what we're going to do is $85.11 per month times 12, which is $1,021.32. That's going to be our new annual premium, which is $120 more per year than we previously did. And we're going to recalculate this case. We're going to solve for $100,000 face value and $1,021.32 per year premium from age 40 to 90. After age 90, zero. Nothing else changes at all. That's all we're changing. And we're going to select calculate. And the system's going to prepare the report. Now, once again, this report we're going to see is only for the standard health class. Okay, it's only for standard health class while we're waiting for the report. If you're between the ages of 20 and 50 and you have an owned term life insurance policy, not a group policy from work, but an owned policy, an IUL is something that you should at least look into. Okay, reach out to a trusted independent agent or broker, ask them what this is all about, see if it's a good fit for you. If you don't have a trusted independent agent or broker, I'm right here. All right, let's scroll down and look at the table, see what we got real quick. All right, so at age 40, we're paying in $1,021 per year, $85.11 per month. Now our death benefit is $100,000 per year. You see we're accumulating a little bit of cash, and we scroll down and go to age 90. At age 90, when Globe Life says, thank you for the $46,000, have a nice life, bye, this IUL has taken $51,000 and returned to, $51,000 and returned to you a bundle of cash that is $155,166 with a death benefit of $162. And that number continues to grow as you age past year 90. Now, an IUL is extremely flexible. We just looked at two quick cases. I would also like to do one thing for you. Let's just say you're super healthy, okay? Not just healthy, but super healthy. And you get the best health class imaginable. How does that change the numbers? Well, while the system's calculating what the numbers are, here's what happens. In an IUL, your goal is twofold. Number one, have term life insurance that covers or meets your needs, and pay as little as possible as you can for that term life, and then throw the rest of that cash at your fund so it grows tax-free. So what we did is we bumped the health class up just a little bit, and now instead of $155,000 at age 90, we have $225,000. So that bundle of cash, because of a bump in health class rating, we went from $155,000 worth of tax-free cash to $225,000 worth of tax-free cash. So, in closing, I hope you found this information to be valuable. I'm going to bring up this other screen. Hope you found it to be valuable. Be on the lookout for additional case studies, additional videos, and additional things we're going to be talking about, which include this whole concept of a tax-free retirement funding, and many other important, valuable topics. Once again, my name is Mike Lucy. I can be reached by phone or text at 734-288-8323. I thank you for watching this video. Have a great day and see you next time. Bye now.